Hi, I'm Parag Sanghani with the Westwood Salient Energy Team. This month's video is going to be a bit long, and so I'll jump right into it. First, beginning with performance. The midstream indices were generally higher during the month. The broad index, the AMNA, was up 2.8%, while the MLP only index was up 8.8% during the month. Broad energy was also up across the board. The large cap XLE was up 2.3%. The producers were up about 1.4% as measured by the XOP, and the oil services companies were up 2.1% as measured by the OIH. Even clean energy was higher during the month, with both TAN and iClean up about 2% during the month of January. Commodities were mixed, with oil up slightly, about 1% during the month, and natural gas down 16% during the month, we think due to warmer forecasted weather for the month of February. Asian LNG was up slightly, about 1.5%, and colder winter weather in Europe during the month of January, we think led to a little bit higher pricing for LNG in Europe, up 5% during the month. In terms of the drivers of performance, looking at individual company level, on page 3, we saw that C Corps were up about 4% during the month, with Plains being up almost 17%, actually more than 17%, driven by strong 2025 guidance and a distribution increase that was above market expectations. On the other end of the spectrum, Venture Global IPO'd during the month. The stock IPO price was a bit rich relative to where the industry was trading, and it did go down subsequent to the IPO. Venture Global VG was down 18% during the month. MLPs across the board were generally higher, up about 8.7% on a simple average. And then finally, the Canadian securities were actually down on average during the month, driven primarily by the new Trump tariffs that were announced and then delayed during the month of January. And that really leads us to what's been going on in the month of January in energy. Looking at the incoming administration, there have been several new executive orders that have been signed so far that are positive for the energy industry here in the United States. First, there was Unleashing American Energy, which mandates a review and requires agencies to come up with solutions and streamlining of permitting for projects, particularly on federal lands and waters. In addition to that, there was a declaration of a national energy emergency that allows for expediting projects, including natural gas pipelines that could potentially service AI data centers. In addition to that, the National Emergency Declaration allows for exemptions from environmental regulations like the Endangered Species Act to ensure that energy supply is actually available as needed. The administration also lifted the moratorium on new LNG export permits that was put in place roughly this time last year by the previous administration. We expected that to happen fairly early on. It was good to see that it happened. US LNG exports are a big driver of the export story here in the United States and is a great resource to the rest of the world. In addition to that, we've got some permitting reform requests in Alaska to help prioritize the development of the Alaskan LNG industry, as well as upgrade and modernize some of the infrastructure in Alaska, which could potentially lead to more production coming out of Alaska in the next several years. And then finally, the administration withdrew the United States from the Paris Agreement, which again was expected. With all that said, there are caveats to the executive orders. First and foremost, we would expect all of these to be litigated, as they always are with executive orders, regardless of administration. That will typically take a few years to really pan out in terms of what the ongoing conclusion will be associated with these executive orders. In addition to that, companies remain capital disciplined, which means that despite an administration that is positive towards additional energy development here in the United States, we think that the power of the purse staying with shareholders means that management teams will remain capital discipline, will focus on shareholder returns, will focus on steady growth that they've been delivering as an industry, rather than this concept of drill, baby, drill. And then finally, market dynamics tend to be the biggest driver of activity in the oil patch. If prices are high, there's more activity, prices are low, there's less activity. And so we think that volatility in commodity prices could derail any kind of acceleration in volume growth that the administration is pushing for. All that really summed up for the midstream sector is that executive orders are generally positive for the midstream industry in general. But as we look forward to what's really slowing growth in the industry, it really does come down to permitting bottlenecks, and that is in the purview of Congress. We need permitting reform to accelerate growth in the industry, and we could potentially get that over the next few years. But as it stands right now, it is really a question mark whether or not that's going to happen anytime soon. With that, I want to thank you for listening in. And if you have any further questions, please reach out to your Westwood representative.